Hello, this is Bert Dohmen with Bert Dohmen's Chart Guru. This is August 17th, and we are entering a very critical time for the markets here. You still have a little bit of time to prepare for what is ahead. For those wanting a complete analysis, please consider our Wellington letter, which is available on our website, which is domencapital.com. Here on this chart, you see the SPY. This is the ETF for the S&P 500 index. It's the red line, and you can see that it's been moving up very nicely this year. But we see something else here as well. The blue line is the McClelland Oscillator. This consists of basically measuring the advances and the declines. That means advancing stocks and declining stocks, and then puts a moving average on those. And it basically is designed to let you know what the majority of stocks are doing, not just one index like the S&P 500, which although it is 500 stocks, there are about 70 stocks that make up most of the movement of the index. We want to know what the majority of stocks are doing, what the big money managers and trading operations are doing. That's what we want to know. And when they're getting out, you want to get out as well. So here we see the May correction, and you see the vertical line here. And this is when the indicator, there's a special stochastic, crossed over. And when it crosses over, it's a sell signal. And you can see how nicely that worked in pinpointing a top at that time. Here, this is the top in the McClelland. Here's the top in the market in mid-May, and you can see here was a 1,000-point correction in the Dow Jones Industrials Index in 1 month time. So it would have been nice for people to have gotten this sell signal based on our analysis, and they did get that. Now then, we had the bottom in June 24th. And we had a nice rise in the market. Here's the S&P 500. But one thing which is very important is that the rally topped out in mid-July, according to the McClelland Oscillator. This is when the advancing stocks actually started easing up and the number of declining stocks started increasing, all the time while the S&P 500 was still rising. This is what we call a trap, a bull trap. Here we see the S&P even making a new high in August, and everybody got very excited about that. But when we look at the McClelland Oscillator, it was already far to the downside and way beyond our sell signal, which came earlier. So here we see a beautifully executed bull trap, and this is what Wall Street does, of course. They want to be selling without letting anybody else know that it's time to sell. Otherwise, the selling of the public would interfere with their own selling. So now we have had here basically 1 month of what we call distribution. Distribution is when the big smart money sells to the not so well-informed money, which is, the majority of money managers. And this is where we are now. We consider this, combined with all of our other work and analysis, a very big warning signal. At a conference in July where I was speaking, was a big conference. We said, you have until mid-August to prepare. And we are there. So you might want to consider one of our advisory services where we have 20 pages or more of analysis and so on, giving you very specific advice. We've caught every important market decline over 35 years, and I think we'll be able to catch the next one as well. We want to thank you for being with us today, but don't take our message lightly. Thank you very much for joining us. This is Bert Dohmen for Bert Dohmen's Chart Guru signing off.